Good afternoon, everybody. Welcome to today's SCORE workshop. This one is on commercial property and casualty insurance, an overview. And it's sponsored by County Bank Insurance Services. Just a couple of things before we get started. All the participants, you're currently muted, but feel free to ask questions. Either throw them in the chat or the Q&A window. I'll be looking out, and keeping an eye on those questions as they come in, and we'll try to get them answered throughout, and also have a little Q&A session at the end. The presentation will be sent out to you guys. Anybody who's actually registered for the workshop will get a copy of the presentation. And also just give me a couple of days and I'll get this up there on the YouTube channel. So anybody who wants a recording can go over there and check it out. Lastly, you'll be sent out a questionnaire tomorrow. If you could, we'd love to get your feedback. Just let us know what's working, what's not working, and that helps us improve future workshops. Just a really quick overview about SCORE. We're 100% volunteer based. We're actually a resource partner of the SBA, and we provide one-on-one mentoring service. That's what we're mostly known for. And we also have an education program, which consists of webinars like today, and also online repository of articles and spreadsheets and other tools that can help your small business. And the bottom line message is we're here to help in any way we can. So the best way to learn more about us, to find information on signing up for a mentor, checking out future workshops, head over to the website, and that's piedmont.score.org. At this point, I'll introduce our presenter, Steve Pardue, and he's a commercial line sales representative. Steve's been in the insurance industry for 20 years. And on the company and the agency side, he's a certified insurance counselor and risk manager, and works for County Bank Insurance, which is an independent insurance agency and is part of County Bank. As a commercial insurance advisor, Steve helps the clients make decisions when it comes down to their insurance and risk management. So at this point, I'm going to go ahead and turn it over to Steve, and look forward to hearing today's presentation.
Morning, Jerry. Thank you for that introduction. I appreciate it and glad to have everyone on the call this morning. I hope that this is informative and gives you a good sort of overview and introduction into the commercial property and casualty insurance industry. Certainly open for any sort of feedback or questions as we get towards the end of the at the end of the presentation. To maybe answer any questions that I didn't touch on. So I want to start a little bit today on ways that you can purchase insurance for a business, and really what that looks like is there are individuals like myself and others that work for what are called independent insurance agencies, meaning that we work with multiple insurance companies. So we help the client find and place the insurance coverages that they need, help them understand what coverages are applicable, which ones aren't, which ones may be a bit of a stretch to cover some things that might not be the most obvious exposures. Then there are what we call captive agents. You might think of like a State Farm or an Allstate agent, where the agent in the office represents only one company. There are online insurance platforms where you can go and shop some of the same companies that I represent, where you're kind of working in a digital setup. And then there are even associations where if you're a member of those associations, you can secure coverages. Quite often it's like professional liability, and we'll talk a bit more about that later, where you can secure the insurance through the association because maybe it's harder to get just in the retail space. So Jerry, if you could go to the next slide, please. So quite often, especially for new ventures or upstart businesses, there's some uncertainty about what insurance is needed or what insurance should I purchase. Some of that, as we'll see in the first bullet, is driven by potentially a lender where a bank will require insurance to secure their investment in the business, where you need to insure a building or some inventory, raw materials, business contents, machinery, equipment, that sort of thing. Also, general liability insurance, which is just sort of a catch-all, commonly used name that protects a business against allegations made by a third party, which could be just a member of the public or a customer, that the business owner is liable or negligent for causing some bodily injury or property damage. It'll even cover a little bit of building coverage to a space that is rented, and coverage for your product or your completed work, as well as for things like libel or slander, which is commonly called personal injury. Many states, including South Carolina, require something called workers' comp. If you have 4 or more paid workers, including an owner or officer, and individuals that might receive a 1099 or uninsured subcontractors. Additionally, customers that you might have could have additional insurance that they require of you to do business with them. A lot of times those are called additional insured endorsements or waiver of subrogation endorsements, quite often found in lease agreements and other contracts. Going back to property, sometimes coverage could be needed for an upfit or a renovation of a building. And you might also even have tools and equipment or things that are on the go or in transit. So we can provide coverage for that kind of thing. We also will insure vehicles that are used in the business. And then other types of insurance that I haven't already mentioned are things like cyber liability, covers things like ransomware attacks, data breaches. This is very important if you have a business that relies on a software system. If that software system were to go down, would you be able to fulfill your obligations, bill your customers, that sort of thing? Employment practices liability covers workplace harassment, discrimination, intellectual property, employee benefits liability, umbrella or excess liability, hired and non-owned auto liability. I mentioned professional liability earlier, covers things like errors or omissions, also known as mistakes, that are just kind of made and the customer feels that you did not render a professional service. And then there's obviously life and or disability insurance, which can also sometimes be required of a lender, but are good things to have. Jerry, if you could go to the next slide.
There's a lot to cover here, Steve. That's
Yeah.
a long list, and it's a lot for I think for small business owners to really think about. So yeah, well, looking forward to hearing the details. So here we go.
Yeah. So a lot of times, sometimes we think about an insurance company and how did they come up with the premium that I am now seeing on a quote proposal. There are a lot of factors that go into determining that premium. A lot of those are the overhead of the insurance company. They have to pay the claims people, the underwriting people, whether the underwriting department has made money or lost money. How are they doing on their investments? Are they making money or losing money there? Sometimes the general public doesn't realize that insurance companies have to buy insurance, and that's called reinsurance. And one thing we're seeing right now is that the reinsurance companies are charging their customers, the insurance companies, a lot more premium than they have in the past. So capacity there in the reinsurance market has a trickle-down effect to really what all of us kind of pay in insurance. And then risk pools, how are, statistically certain classes of business or individuals performing versus others. On a individual level or an account level, the claim experience of a particular account can be a driver of what premiums do at renewal time. A lot of policies are written on a 12-month basis where the insurance company guarantees that premium for a 12-month period, and then at renewal they have an opportunity to sort of renegotiate that. Specific to workers' comp, there's an organization that the state of South Carolina uses that develops what they call an experience rating as well. And that's a kind of a complicated computation that includes your claims, your payrolls, and they typically come up with a factor that is above or below a 1. And if it's below a 1, that leads to some premium credits on workers' comp. And then conversely, if it's above a 1, it can lead to some debits where you're going to pay a little bit more for workers' comp. So next slide, Jerry. So a common question, and one that we're seeing a good bit right now, because we are in or the insurance industry as a whole has hardened, meaning that we're seeing rates and premiums go up. So what are some tools that can be used to minimize costs? Sometimes that can be a higher deductible, which you'll typically see on property and auto policies. It's never going to be like a dollar for dollar trade-off. But when an insurance company sees that maybe you're taking on a little bit more risk, you have more skin in the game, they may give you a deeper discount. But that is one tool. On workers' compensation, the state of South Carolina will give you a 5% drug-free workplace credit if you have a policy where you are testing folks for substance abuse post a work comp injury or prior to hiring them. We sometimes see multi-policy and paid in full discounts. And then a couple other things that are maybe a little bit, I don't know what's the right word, but are maybe not as specific in terms of the discount, but just making sure that the insurance professional that you're working with, that they have a good understanding of what your business does. Why is that important? Well, when you're working through an intermediary, someone like myself, I have to sell your account to the insurance company. Like, why is, this company an A+ risk versus maybe a B+ risk? What are some things that they do to prevent or minimize potential claims or having to use their insurance? Thinking about events that could lead to a significant financial loss, and how the things that you do may prevent or minimize that from happening. We can use that information to kind of sell your operation to the insurance company so that they give you their most preferred pricing. Jerry, next slide. Oh. So that is a bit of an overview of some of the basics of the property and casualty insurance space. We talked about some of the basic coverages: property, general liability, auto, workers' comp, and then there can be some specialty coverages in there too that can be unique to organizations and that aren't always needed. But talking with an insurance professional, someone like myself, they can often ask you some questions to maybe identify some blind spots. Because a lot of times when you're starting a business or buying a business, you have a lot of things you're working on. and you're focusing on trying to get the acquisition done, or just how am I going to turn a profit? And you may not think about some of those deeper exposures to risk. So I hope that that was informative. I have my contact information here, and I'm always happy to be a resource to answer any questions or just give you some advice on some things you may want to think of.
That's great, Steve. I think that we covered a lot in a short amount of time. I'm going to scroll back because I think there was a couple of questions as we went through. Particularly on the one here, as you started going through a lot of the details.
Yeah.
It's a lot, so it can be a little overwhelming for any small business owner. So maybe we can chat a little bit about how would they determine, what of these different components would be required for them, and you're not over insuring but not under insuring, and how do they find that balance?
Yeah. So, I've been doing this for 20 years and I've never seen the perfect insurance policy. Budgets always come into play, and you kind of have to determine, like, hey, what are some things that I'm completely risk averse to, and maybe what are some things that I believe is something that I can potentially self-insure. Software and data and things that are kind of integral in all businesses nowadays. So as a result, we all have exposure to things like a data breach. We get an email that has a malware virus on it. Somebody hacks into our system and locks our data down. All of those things could kind of tip your hat to, hey, I have a cyber exposure. You can minimize those things by having like a third party IT vendor that you work with, having adequate backups of your critical data. But those are kind of signs that would say, hey, I have some exposure here, and all of those things are not going to be covered by a general liability policy. So that's why the cyber liability policy exists. Mm-hmm. Employment practices liability probably isn't something that a business needs to consider until they get, to 15 plus employees. That's just a rule of thumb. Intellectual property would be something important, to where if you have a copyright, a trademark, or if there's potential that a third party might allege that you've stolen their intellectual property. So it has some first and third party coverage. Employee benefits liability covers errors or omissions made in administering an employee benefit plan. So if you don't really have employee benefits, you probably don't need that. So a lot of times those might not come into a play until you have, maybe 5 or more employees. Mm-hmm. Umbrella or excess liability essentially adds more liability on top of the liability provided in the policies that most businesses are going to buy. So this is just going to kind of help cover some of those, what we might call nuclear verdicts, where, you have an employee who's driving a vehicle down the road and they run into a car full of 4 anesthesiologists. That's going to be a policy limit type event. And $1 million is probably not enough coverage. So you may want to buy more liability. And a lot of times that can be bought for, a fairly affordable amount of money. Mm-hmm. Hired and non-owned auto liability. This covers the use of a rental vehicle or a just non-owned vehicle. Maybe you have an employee that's running errands once a week. They carry state minimum limits and they cause an accident, and their state minimum limits are not sufficient to pay for that damage that they've caused. This hired and non-owned auto would be an excess liability policy there. Professional liability a lot of times comes into play for more sort of historically professional type positions, accountants, engineers, lawyers, medical, insurance, but quite often we're seeing a professional liability exposure coming into litigation where a jury or a judge feels that, hey, if you have some, like a consultant, for example, where you're marketing yourself as some type of professional, and you have a customer that feels that you gave them bad advice. No property was damaged or no one was injured, but you gave them some bad advice, and that maybe led to some financial damage. We're seeing cases where people are getting sued in that arena. And then life or disability, just kind of covering the value of you to a bank that's made a loan to you or your family, potentially your business partners, and then disability, just kind of, our ability to earn a paycheck quite often is pretty significant. And if that is gone, then disability insurance can step in and provide some wage replacement so that, while you recover short, long term, or if you never recover, it provides some income replacement to you.
Great. Thank you. Yeah, it helps with going through some more detail and really describing what those various types of policies are.
Yeah.
And then, as you mentioned, or in your bio here, we in your also in the introduction, we're talking about not only insurance, but overall risk management is what you have here, insurance and risk management. So
Correct.
Just to everybody online, I mean, this is an important distinction. And that if you listen to everything that Steve just described, our advice, or my advice as a SCORE mentor, is be sure that you're working with an insurance agent that really can relate to you and can understand particular situation, your business, what your needs are, and what your tolerance for risk is. Because as you listen to Steve go through all of these policies, it's easy to say, wow, that sounds interesting. Maybe I need that. Maybe I that. And maybe you do. But at the same time, if you signed up for every one of these policies, your cost would be probably way too much to support your business. So there has to be some sort of mitigation and trade-offs between the cost and the risk. And that's what we call risk management. So maybe you can speak a little bit to that, Steve, because I think that's an important concept for small businesses.
Well, that's right. And when we're speaking with really a new venture or a young business or even a mature business, we're trying to ask questions. And I know sometimes, people don't like getting asked a lot of questions, but that's our job to, because they're not doing insurance every day like we are. They're not seeing the claims that we're seeing. So we can use that experience to ask questions to identify exposures to risk. And then we can talk a little bit about, how big is that exposure? I mean, if this happens, how are you going to react to that? Is this something that's kind of a have to have, or is this just kind of, hey, that would be nice to have? And if it's the latter, then, maybe there's a very small amount of coverage or a limited amount of coverage that can be added that just doesn't have a big price point, like a full-blown policy might have to address that exposure. But part of, kind of the risk management piece is just identifying what exposures are there, assessing how significant they are. And then, there may be some like little tools that we could help you implement where it's a policy or a procedure, or maybe it's a third-party vendor that can help minimize your exposure there, which may kind of reduce or eliminate the need for insurance altogether. It's such a broad spectrum, and it addresses so many different lines of property, liability, auto. Do you own a building? Do you rent a building? Do you have employees? Do you not? If you're making something, like, what's the end use of that product? What happens if it fails? What happens if you're in a building and your building burns down? How are you going to continue to generate income? there's just some pretty deep, important questions within every aspect of a business. Again, you're never going to have the perfect arrangement or the perfect policy, but we want to try to put the optimal solution in place so that, you're not worrying about these exposures to risk that could kind of put you out of business potentially, or make you lose all that sweat equity that you put into building something.
Mhm. Excellent, excellent. And then just the one other question I had, and it's something that I've sort of seen in the past. It seems like there's sort of outlier policy, something like water damage. Doesn't that seem to fall separately from property? And how would things like fire sort of come into play? And I guess things where the client may feel like they have insurance, but maybe they don't. Is there areas that you want to highlight that might talk about that?
Sure. So, kind of in our space, I was at a continuing education class last week, and we were joking that, pretty much every client believes that everything is covered. um, and, insurance contracts and policies have limitations, they have exclusions. They're not meant to cover everything. And flood is an example of something, along with things like earthquake, that are not automatically covered. And if you are located or you have property that are in a flood zone, or even if you're not in a flood zone, you may want coverage for things like just surface water that may come from a heavy rainstorm, or water that backs up from like a sewer or a drain. Um, those are specific things within a property insurance discussion where we're going to talk about, these types of things. If it's a building that's been around for a while, a lot of times you'll know, hey, is that building prone to flooding? Because it's been there for a long time. There's an organization called FEMA that has something called a flood map, and they've updated some of those flood maps as to whether a building or a property is in a flood zone, how severe is that flood zone. And then if you are in a flood zone, you can buy what's called a sort of a primary level of insurance to the National Flood Insurance Program. I think that caps out at either 250 or 500,000 for like a building, and that's a per building limit. And then you can buy excess coverage as well. But yeah, flood is a bugaboo sometimes because it isn't automatically covered.
Mhm. That's really informative, Steve. Yeah, we covered a lot of ground this morning, and really appreciate the depth and the detail. Everybody, again, here's the slide with Steve's contact information. But no worries, you're all going to get a copy of this presentation, and again, I'll have the recording up on the YouTube channel in the next couple of days. But if you want to take a snapshot of it now, go ahead and hit that. And yeah, with that, we just peek and see if we have any other questions in the queue. It looks like we covered all of the questions that were there. Yeah, we got some comments, just great content. Thank you and such. So
Right.
with that, I think I'm gonna go ahead and wrap up the webinar. Steve, unless you have anything else that you'd like to add. And again, thank you for your time, and appreciate your contribution and helping out our small business community.
Happy to do it, Jerry, and I appreciate the platform to do it, and happy to be a resource should anyone want to reach out via phone or email.
Great. All right, Steve, have a great afternoon, and thanks again.
You too, Jerry. Thank you.